All right, welcome to this explainer. Today we're diving straight into the complex, literal heavy lifting world of Concrete Pumping Holdings. Specifically, we're going to unpack their second quarter fiscal year 2026 financial results. Now, if you follow the construction and infrastructure space, you already know that navigating today's economic environment is, well, no small feat. But this company's recent SEC filings and earnings report reveal a really fascinating story about strategic maneuvering, intense operational discipline, and shifting market tailwinds. I'm absolutely thrilled to guide you through this filing so we can uncover the exact strategies driving their performance right now. $106.8 million. Just let that sink in for a second. That is the revenue Concrete Pumping Holdings, or BCP, generated in just the second quarter of 2026. This isn't just a big, flashy number. It represents a highly impressive 14% jump from the exact same period last year. In a market that's heavily clouded by high interest rates and slowing residential builds, generating double-digit top-line growth is a massive signal that something under the hood is working exceptionally well. That $106.8 million is really the bedrock of our whole analysis today.
Okay, let's dive into this. We've got a really clear, structured roadmap to navigate this dense SEC filing. First, we'll look at strong second quarter results. Second, the driving forces behind growth. Third, a segment-by-segment look. And finally, navigating the 2026 outlook.
Strong second quarter results. Let's lay the groundwork by looking at the company's bottom line performance.
Right, so before we completely geek out over the spreadsheets, let's visually establish exactly who we're looking at here. Concrete Pumping Holdings operates under established national brands like Brundage Bone in the US, Camfod in the UK, and EcoPan in both regions. They are a leading provider of highly specialized concrete pumping and waste management services. So to be clear, they aren't the ones actually pouring the foundation. Instead, they provide the massive specialized equipment and the highly trained operators that allow builders to place concrete efficiently, safely, and crucially, with way fewer labor hours.
Let's look at the actual Q2 2026 scorecard. Like we established, revenue is up 14% to $106.8 million. But look right beneath that. Gross profit also rose 14% to $41.3 million. This lockstep growth is absolutely crucial because it tells us they're maintaining their margins even as they scale up, despite obvious inflationary pressures on things like repairs and maintenance. Then, look at income from operations. It literally surged 46% to $12.1 million. And finally, net income swung right back into the black, hitting $2.5 million compared to virtually breaking even at a minor loss last year. Honestly, these numbers are a massive testament to solid, disciplined operational execution rather than just a lucky quarter.
And looking at adjusted EBITDA, which, is basically their core operational profitability after stripping out things like taxes and depreciation, well, those numbers jumped 17.4% to $26.4 million this quarter. Crucially, their adjusted EBITDA margin expanded to 24.7%. To put that into perspective, for every dollar they bring in, almost 25 cents is dropping straight down as core operational profit.
Moving on to Section 2, Driving Forces Behind Growth. Let's look at the why behind the numbers and the economic currents they're navigating. We're seeing a fascinating, massive macroeconomic pivot that the company is currently riding. It's almost like a giant seesaw. On the left side, we've got a widely known headwind, slowing residential and light commercial markets. High interest rates and broader economic uncertainty have definitely put a damper on home building. But on the right side, there's this massive structural tailwind, booming data centers and infrastructure projects. The explosion in artificial intelligence is driving huge data center construction, and those government-backed infrastructure projects are finally breaking ground. BBCP has successfully pivoted its heavy equipment to serve these booming sectors, which is perfectly counterbalancing that residential slump. To put a human voice to this strategic pivot, Bruce Young, the CEO, actually hit the nail on the head in their earnings release. He noted the healthy activity levels in commercial and infrastructure construction, specifically calling out that continued momentum in data centers. But he highlighted something else that's super important. The company is realizing the benefits of a disciplined pricing strategy and operating efficiencies. So it's not just that they found the right customers, they're actually charging the right price and managing their internal costs effectively while doing it. All right, Section 3, a segment-by-segment look. We are going to peel back the layers and examine the three distinct foundational pillars of the business. Now, before we look at the segment revenue, we need to clarify what one of those segments actually is. And that's EcoPan. This is their concrete waste management service. Look, when you pump concrete, there's always washout and waste. It's a messy business, and it requires strict environmental compliance. EcoPan provides a route-based, full-service, regulatory compliance solution for this.
It's highly complementary to their core pumping service, and as you'll see, it's a wonderfully attractive part of their overall business model. Now, what's really interesting about this slide is how immediately clear it is where the lion's share of their business comes from. U.S. concrete pumping is the undisputed heavyweight here, bringing in $71.5 million this quarter. That's a 15.2% increase year over year. Next up is U.S. waste management, that eco-pan business we literally just discussed, which generated $20.3 million, up an impressive 12.7%. Finally, we have their UK operations coming in at $14.9 million. The U.S. segments are clearly driving the bus here, heavily fueled by those data center projects and that better pricing we talked about. But, it's not all perfect tailwinds. Looking at the UK operations, while revenue technically increased by 8.2%, that was really heavily influenced by foreign currency translation and an acquisition. If you exclude currency impacts, revenue only grew 3.6%, and the segment actually posted a slight net loss of $0.1 million for the quarter. The company notes continued softness in commercial construction demand over in the UK, coupled with very real inflationary pressures hitting their labor, fuel, and repair costs. It's definitely a challenging environment that management is actively having to navigate. Finally, Section 4. Navigating the 2026 outlook. Let's shift forward and see how they are strategically maneuvering their capital for the rest of the year. So, the absolutely crucial point here is that despite the residential softness in the US and those headwinds in the UK, management's confidence is actually growing based on their first half performance. They've officially raised their full year 2026 guidance. They now expect revenue to land somewhere between $410 and $425 million. They expect adjusted EBITDA to push up between $98 and $105 million. And perhaps most importantly for you investors out there, they expect free cash flow to be at least $45 million. What's truly remarkable here is that they raised this guidance while explicitly assuming that the residential and light commercial markets will not meaningfully recover this year. They are betting entirely on their own execution and that infrastructure boom. And let's detail how this capital builds into their long-term fleet strategy, because this is an incredibly smart, almost chess-like move regarding capital allocation. As of January 1st, 2027, stricter U.S. emissions laws take effect for heavy-duty engines. That means brand new trucks in 2027 are going to be significantly more expensive due to new technologies and OEM production costs. To beat this, BBCP approved pulling forward $22 million of planned truck fleet investments from 2027 into 2026. While they hadn't spent that accelerated money as of April 30th, they are completely setting up to buy current generation trucks late this year. This avoids the inevitable 2027 price hikes, navigates expected supply chain disruptions, and keeps their fleet fresh and highly competitive. All of this leaves us with a really compelling narrative. Concrete Pumping Holdings is successfully using disciplined pricing and really strategic capital allocation to ride a massive infrastructure and AI data center wave. But the question we have to ask moving forward is this: as infrastructure continues to boom, can Concrete Pumping Holdings continue to outpace the residential slump? Well, the Q2 numbers strongly suggest they can, but the construction market is notoriously cyclical. Thank you so much for joining me for this explainer of BCP's financial foundation. Keep a close eye on those heavy trucks. They tell a much bigger story about the broader economy than you might think. See you next time.